streaming. There we go. Alrighty, we should have everything good to go on there. Alrighty. With that being said, can everybody see my screen? Let me get some
I
movement.
don't see anything.
You don't see anything?
Yeah, gotcha.
You got it? It's up there, Jeremy?
Yep. It's running.
Okay.
And on YouTube, too.
Okay, well, darn it. Everything works good. I'm sorry about that, man. Try and click around. You might be able to find it on there, buddy. Alrighty, so
Yeah, I'll work on.
let's go ahead and do our top-down analysis. Housekeeping's out of the way. Do keep in mind that today is FOMC. So what is FOMC? Without getting into the weeds of Benjamin Graham and everything else on this one, they're who the market's going to be keeping an eye on for interest rates for this. Again, that's been the tip of the tongue for, 2 years now? That's been moving the entire market on there. So FOMC is definitely something you want to keep in mind when we're looking at everything. Initial notes come out at 2 on there, and then Fed Powell will come out at 2:30 to basically read the notes. Notes give you a tip of the hat of what you're going to see in the price action. It's when the Q&A starts is when we tend to get a little bit more volatility out of things. Now, in utilizing that volatility, we're able to make strategic entries and exits based off of our opinions on that directional flow. Now, looking back at the data on this, if you go back and look at the last 5 and last 10 of the January FOMC meeting minutes, statistically speaking, we have an uptrend in the market within about 15 minutes after he starts the speech on there. So with that being the case, that gives me my general bias of what's going on. The last time that the market was down 15 minutes after his speech was, I think, 21 on there. And so that means that for today, while I am still keeping a very close eye on the verbiage and how he presents that information, I am leaning generally biased towards a bull side after his commentary. Now, in the morning session of FOMC day, I specifically cut my size on there. We typically see a very meandering market. We'll get a little bit of movement here and there, but nothing that warrants putting on full tilt, in my opinion. Now, once the FOMC is about to start and he's about to come out and talk, that is when, and I'll post this in the main chat when it comes to fruition as well, is that is when I actually look on to put a plus size. I have a very specific strategy that I've utilized over the years for this, and it's simple but effective. It works on a 5-minute time frame, and I'll go over into that more as we get approaching to that timeline. But that's the time that I'll be putting something on for my size and my risk. I'm comfortable putting on somewhere between 50 and 100 contracts on that. But that's it. I won't go any higher than that. And that's on the NQ. That's not on SPY. On SPY, I'll probably run something like around 100. So with that being the case, you have to keep your risk metrics in check. But what we typically see during that is that what happens is price action around the 150 to 2 o'clock, we'll see things deaden out right in here. And then what we'll end up starting to see is that price action, once those notes come out, we'll get a tip of the hat one way or the other as far as, are we going to meander down, or is the market going to see this as a reason to go up on here. What you're going to be identifying is looking on a 5-minute time frame. Look to the left, and you need to find your nearest flat spot. What do I mean by that? Let's pop over to the SPY real quick. So it's much easier for me to say, a flat spot than it is for me to really reference it as anything else. As we're seeing right here in the pre-market action, you see how price action made its way up, pulled itself in, made its way up, and it basically ranged right in here. This is what you're looking at as a flat spot. If right before the event here, we have jaggedness and then a flat spot down here, if price action shows bearishness, there's a high probability that the first roof of your flat spot here is where that they are going to target that liquidity. They're going to target that zone. The inverse is also true. So for today, let's say hypothetically we spike up right in here, and then this ends up being a resisting structure right above us. When the news comes out, if price action is here and it is starting to show some bullishness to it, this is your highest probability event that price will make its way up to. So how do you make a play off of that? How do you put a general analysis around that trade to make an actionable thought? What tends to happen is that we're going to say that this red line here is our neutral spot. Price action will rush its way up to that targeted area and then regress within the candle. What I look to target is that regression right there. So what I want to see is that regression. Oops, sorry, that one. That regression within the candle. And this is specifically within a 5-minute candle. Okay? Now, within that area, what I will look to do is I will place a short here. I look to sell contracts at that resistance. And then as we have that regression in this, I set my closing order at the 60% mark. So what does that look like in totality of this? If we have, let's see. Where's my better drawing tool? Oh, that'd be easier. All right. All right, so we have a candle that makes its way up. It hits our resistance right here. It hits that limit order. That limit order, let's see. Actually, there we go. When it hits that limit order right there, I will be short the market, and then I'm looking for this price to come down to about the 60% of that candle. So we'll look for this candle to go from being up, and then price action to go from here, let's change that color, down. Okay, so this zone is my profit. I am not looking for a full collapse on this. I'm just looking for price to regress in about 60 to the 60%, 50, 60%. So this has happened time and time again, and you can go back and look at whatever market replay info you want to, but this is a strategic entry. Now, they could trend higher later on, and I'll play that move as well, but my first move is for them to target that first either resistance or support, pick up my limit order, and then walk that candle back to wherever that price started in there. So I'm playing that regression channel. Like I said, a very simple strategy, but a lot of people mess it up because they're looking for continuation of that trend. This specific strategy is not a continuation strategy. It is a strategy based upon instant sentiment reaction within the market. So Keep that in mind. If anyone has any questions on that, please feel more than free to ask. I am watching the main chat on that YouTube. If you're out there, I'm not watching that chat. Jeremy's watching that chat. So you will have to ask him questions on things for that. But that's the trade that I'm looking at for the FOMC. Now, what are we expecting on the day? What are we looking for on the day here? Let's break ourselves down to the 1 hour time frame. Awesome. All right, so on
I actually have that chat turned off at the moment.
Awesome. YouTube, if you want to chat, you want to ask questions, guess what you got to do? Check out the links below and hop over into the trade room. So good stuff. Alrighty, so looking here, what are we expecting on the day for today's price action? We can see a pretty classic flag setup right in here. Go ahead and get that labeled out. We see a whole bunch of liquidity sitting right here. So this is sell side liquidity. Okay, sell side liquidity. Let's actually move that over to the right so you guys can read it. There we go. All right, buy side liquidity right up here. Nice little move, a little bit of probing above it, but majority of it right in there. Okay, buy side liquidity there. And we also have sell side right here on the hourly. Now, this is setting up with a pretty standard range. I like what I'm seeing. We know that there's going to be a low amount of volume today within the market until we hit that FOMC. So we'll get our initial jitters out of the market, and then we will see price action really taper off. Okay. Good central channel. I like what I see through here. Bringing it down to the 5 minute. Yeah, a lot of reactionary, a lot of oscillation at the 50% area. So for right now, we're pretty much setting up in a pretty large macro channel, and one can draw that, and now you're able to state two different things. One, if you are a channel trader, then you now have your zone to work with. You have your channel to work with. You can see the 50% oscillation, work that area. If you are not a channel trader and you need to wait for the breakout of price action on this, what you would be looking for is, if we break this lower channel, there's a high probability that we'll see something along this line here. Price breaks, hits these equal lows right here, and we actually end up with break. Buyers step in as sell side liquidity gets hit on this. We get a slight bounce as they try to test that top, and then we waterfall down to here. Now, why would we waterfall down into here? We have this area right in here where we had congestion and then acceleration, okay? So the highest probability event is that we're going to come right back in here to this LQ, and that this is where we're going to see a terminus. So what does that look like from a risk-reward standpoint? Again, we all know I hate the idea of a pure 1 to 2 on there, because pure 1 to 2 depends on your order entry. Unless you're being specific with your order entry, you'll more than likely never have an exact 1 to 2 unless you're running dead limit orders, etc. It'd always be something like 1 to I don't know, 1.8, 1 to 2.03, whatever. So, all right. So how does this look on a risk reward scenario? We can see if you're okay with taking macro risk, then you're going to be up here above the channel. Okay, you're going to be above these highs by about 2 points on this. If you're on the SPY for that, it's going to be about 20 cents is what you would be above that. So Nice move there. So how does that look for our risk reward scenario here? We can see that if this is the target we're working with, if that's our macro risk, then we got a 1-to-1. If we're working for this order block down here, then you can see risk adjusted, that OB. So now you're able to actually sit here and go, okay, I see the way that market action and market has opened, so I'm keeping an eye on the prices here. Market has opened. I feel realistically with the data that I see that we could go to, but not through this OB. Put things back into perspective. Okay, top of the OB. If I'm going to enter on this break, i.e., about right down in here, just below those equal lows, where does my risk need to be for me to have a nice 1-to-2? Now you can adjust your risk. 50% area, that's respectable. That's respectable right there. So looking at that, you can say I'm going to enter at, call it 490, 2 contracts to the downside. Awesome. My risk is going to be basically 1 delta. So you're risking about 1 delta to make 2 deltas roughly on there. So if you're using an at-the-money contract, that's going to be about $47 per contract on the SPY. So then you're able to make that calculation and that sizing for your appropriate allocation and your appropriate risk size for that. So just keep that in mind. Alrighty, I like what we're seeing right through here. I'm going to pop over to the NQ. Make a little dough if available. Alright, let's go ahead and get our NQ analysis here. You can see yeah, we're going to move down. Yeah. Up. Down. YouTube, if you want to see more, you want to see the NQ trades and any other trades we have for today, make sure to hop over into the description below and hop over into the trade room. Other than that, we will see you live on the next one, YouTube. Thank you.